So yesterday is a perfect example of why you don't freak out, why you don't invest with emotion, why you don't panic while everybody else is panicking. Because while some people were screaming about yesterday being the largest crash since 1987, it ended up turning out to be the exact opposite, like we talked about. It was a big nothing burger, stocks closed neutral, crypto rallied. And what we're seeing is things begin to shift the opposite direction at the start of today. Now, what I will say is that it's looking like things are shaping up to see more volatility over these next few days. And we're going to talk about that, break this all down in this video. So if you guys are new or haven't already, make sure you hit that subscribe button down below. Hit that bell again. It's free to do. It'll keep you updated anytime there's new content live here on the channel. So looking at ADA, yeah, we had a massive rally off of yesterday's lows. We saw ADA, even at the time of filming this video, up about 14%. I mean, that is a great rally back for ADA. We saw this big bounce across the crypto market. And just to kind of break this down as the day went on, obviously there was a lot of profit taking that went on yesterday as well, but you just continued to see the crypto market bounce back. We had this massive rally kind of earlier on yesterday on these reports surrounding the Trump administration potentially pausing tariffs for 90 days. Turned out that was false news, and we saw the market kind of pull back on that confirmation, but then we just continued to rally as the day went on. We actually, during that time, saw ADA rally above 60 cents. We saw actually BTC rally above 80K, trying to get back within structure, trying to get back in that big descending wedge. So frankly, all things are looking pretty good right now. And this is kind of what I was talking about yesterday. Panic is a short-term sentiment, all right? And now that short-term sentiment has kind of died down. And why I'm saying that is, one, the US stock market closed neutral yesterday. We saw the Dow Jones down only 0.9% on the day. We saw the S&P down about a quarter point. We saw the NASDAQ close up 0.2%. Now, overnight, what we've also seen is Asian markets begin to rally back. So again, this was kind of a short-term deal, a short-term panic. You know, how bad would the US market be? People screaming for 20%, not even close. Now, what I will say here is that there are a couple things that we do need to watch. All right. First of all, what we are seeing is basically a big confirmation of a trade war. And this isn't, the US versus everybody. This is the US and China. And this is just kind of a little bit of speculation here. So I'm thinking what they're doing is, if you guys remember, the BRICS nations are trying to get off the US dollar standard. They're trying to basically create their own global powerhouse in terms of trade. But what's now happening is that because the US tried to impose all these tariffs on countries throughout the world, and now you have these countries coming back to the US to facilitate these trade deals, it's kind of putting the BRICS nations on an island by themselves, right? Because if the US puts together some very good trade deals, they're kind of sucking everybody else back in. And so China will probably be one of the last entities to come to the table. That would not surprise me at all. And China has responded saying they will fight to the end. Donald Trump has obviously threatened an additional 50% tariff. So this is 100% a trade war between China and the US. We did in fact see the Chinese, hopefully I'm saying this right, yuan falls to the lowest level in 2 years. So that is actively affecting China currently. All right. Now, that being said, there are some good things here that we need to watch. The U.S. Department of Justice shut down the unit dedicated to crypto-related investigations. So the war on crypto is essentially officially over here in the U.S. That is a great sign. All right. Now, what I do want to point to is the fact that we probably haven't seen the last of volatility. All right. And why I'm saying this is, first of all, we need to make, we need to make sure that today is not a delayed fuse. Okay. You always run that potential, right? Yesterday, the markets acted the exact opposite way that people were expecting. So now today, probably, wow, I'm stuttering. I don't stutter. We are probably expecting the markets to rally, right? Crypto market, US stock markets, and this, in fact, may be where you see a drop take place. Now, this isn't a guarantee or financial advice or anything like that, and I'm not trying to scare anyone, but you always run that potential. But why I'm saying we probably still have a lot of volatility ahead in terms of price is look at where the long and short leverage is once again, okay? We saw a lot of longs fill in down here for ADA yesterday. We saw a lot of shorts pile on top. So we're getting drug around all over the place here. Now, that being said, big concentration of long positions at about 57 cents for ADA, big concentration of shorts at about 60 cents. That's not a wide gap. Volume is high, once again, $152 billion over the last 24 hours. So I would expect volatility to continue. Today is going to be very telling. And then understand that in 2 days, again, we have our CPI report, guys. So we're not out of the volatility quite yet. Maybe today or tomorrow is a little bit more quiet of a day, but it's not going to stay quiet for very long. All right. Now, what I do want to point to as well is longs are getting very confident in terms of ADA. And part of the reason for this is there was actually a video released by Ripple yesterday about real world asset tokenization that showed ADA in this. And I'm going to do a dedicated video surrounding this because I don't want this video to get too long. But this is actually potentially a huge deal for Cardano and for ADA because you might see a major integration taking place there. All right. Now, that being said, going back to what we've talked about before, we are not out of the realm of normalcy in terms of the charts, right? People keep pointing to saying that the charts have broken down, the cycle's broken down, we're out of structure, we're not following any historic trends. We actually are. I mean, we've talked about this before. We're very mimicking 2017. We're either mimicking that or we're mimicking late 2020. It's all playing out the exact same way that it has in the past. And what that might mean is we have major moves ahead. Now, this isn't to guarantee or financial advice or anything like that, but we have to think about, we might be talking about potentially emergency rate cuts if things continue to stay a little rough in the stock market, if people really slow down spending. I mean, there's a lot of things that could basically trigger this to take place faster than people were expecting. Now, a lot of that's just speculation at this point. We need a lot more data, need a lot more things to take place before we're at that point. But, you can't help but point to a lot of the similarities to what we've seen in the past. So that's what I'd say here. We could see very quick wicks as the day goes on. Me personally, I did actually open up a couple longs yesterday, and those are looking pretty good right now. Can't really complain about that. I expected yesterday to kind of be a big nothing burger. So I appreciate you guys as always. I hope you enjoyed the video. Let me know your thoughts below. Where is price headed as the day moves on? But I'll catch you guys in the next one. Take care.